What is going on, everybody? In this video, we're doing a state of the market and stock picks for September 20th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this phenomenal market. So let's get straight in. The market really didn't move much today. It moved up towards the end of the day. Something I've been saying is I'm kind of hoping that the market could potentially hit roughly around that 4K by Wednesday is what I'm kind of hoping for. That way we kind of gain a little bit of margin off this support, although we could be potentially retesting roughly that 3,900 tomorrow and reject off of that. We have to see. There's still a lot going on. We do have Japan's inflation rate highest in near 8 years today. That was just came out, rose to 8% or 3%, excuse me, in August 2022 from 2.6 in July. So inflation is getting out of control. It's not something that's new. U.S. home builders sentiment falls more than expected. There's still a lot of really bad news just going on in general. But one thing to consider, again, after monetary policy, we'll have essentially a whole month. We will get a core CPI in between there, but we will have a whole month without any Powell. I mean, there'll be some Powell views, I'm sure, some meetings, but there won't be any monetary policy, which is really what matters. And then we'll see what happens on Wednesday. Wednesday is the big day. Wednesday is the day we're watching and see where we land. If we come at 75, I believe we could pop, but I think whatever pop is going to be briefly met by a lot of sell pressure. We are getting ready for earnings mode in a couple of weeks here, about a month out from that. That will really determine, I think, how bad things really are. Now, we've had all these rate increases and stuff like that, and something I've always said is that, you won't really see what happens with these rate raises till further on. We're starting to see it. We're starting to see those foundation cracks that I talked about. I think you're going to see those more exposed during this Q3 earnings report, and then Q4. I think you're going to probably see a lot of breaks and a lot of issues. A lot of people are getting laid off. Banks, in particular, over this past quarter, have been doing a lot of layoffs, and so. And they still got about a week, 2 weeks, a week and a half before Q3 ends, and we'll see what happens. And maybe they hold off to letting go of people until the next quarter, and then we really might not see those numbers to the Q4 earnings, which will be in the beginning of the Q1. We'll announce Q4 earnings. But with that being said, we're going to have to see if we can get any kind of rally coming off of this earnings. Again, if we come in at a 100-point basis move, it's going to bring a lot of pain, in my opinion. Now, with that being said, you do have the Russia and China fiasco going over there in their collusion and what they're talking about, their threats. Again, that could drop overnight and things will just start selling. This is what I've been talking about. There's a couple different black swans that we're aware of that if they do play out, will increase the sell pressure even more than what it is. And it would be essentially new news. Whenever there's new news, it can make a big impact. And something I talked about in my weekly update is that we haven't essentially roughly a recession period is roughly around 43% average. And any one of those black swan events that occur could dip us down another 20% from where we're currently sitting, if not more. And now, if a couple of different black swan events happen at one time, that could be catastrophic. So it could happen. I'm not saying it could and it couldn't happen. So just be mindful of that. Just be aware of what's out there and what could potentially play out. You have to play out the different scenarios and what could potentially happen. And this is the way you can manage your risk. And for myself, like right now, I'm not trading real heavy because it's very difficult to determine what's going to happen. And typically I won't even take position unless I know for sure if we gap up or gap down. It's normally pretty easy. That means we'll at least have momentum for the first couple hours of the day in that direction, depending on which way we're gapping. If we sit flat like we did today, I just wait and see what happens, or I trade extremely light and I wait for it to essentially hit um, a supplier demand, or really kind of see from there. But ultimately, if it's flat, I just don't trade it and I wait for a move first and then see where it stalls, watch price action, and then take position based off of price action. But nonetheless, this market is very tricky to navigate. And so, again, Wednesday is the day we're looking at. For myself, again, tomorrow, I want to see if we can break this. If we break the 39, if we do, the next big gap for me is the 4K. Hoping we get there. Again, you're going to come right into monthly support after a break here. We had momentum. Now we broke back down again. See what kind of momentum we get going into Wednesday. Again, we may just stall here. We may sell back down to the 38.42. It's kind of been the bottom of this range we've been playing until we hear from Powell and get monetary policy, and then make a determination from there. Again, if none of the black swans play out, if we come at 75-point basis move, we could potentially pop to 4K. Then maybe sell off a little bit just as a normal move, and then prepare for earnings and kind of float around here and then start pushing back up to some extent. I think if things play out, again, no black swans, only 75%. We're used to 75%, even though it's really bad in the impact that that's going to have. But again, you have to wait for the market and see how the market digests it. The market will digest it different from the way you think. This is why allowing the market to digest 12-hour period, see how the market does, or 24-hour period, and see how the market does, and then take position off of that digestion, because you will get an incorrect move and then the market moves the other way. So you have to be mindful of that as well. But with that being said, these are the time of days you kind of just research or just stand back and don't even just kind of watch the market, kind of see what it does. Not saying you have to sit and watch it all day, but these are the kind of days you just sit back and wait for something to happen. Don't force anything. Don't take positions, especially if you're in options. Do not take options unless the market's moving. Shares, if you're DCAing, again, I think it's a time you can slowly be doing that. Again, not financial advice, but I don't think you should be DCAing heavily. You should have it spread out over a period of time, as opposed to just essentially buying in bulk. Wait, slowly DCA in when it hits your numbers. Again, you could miss the bottom and still have some of whatever the price is, or whatever the number of shares you buy, whatever the case is. That's fine. Don't FOMO. This is not the market to FOMO in. Again, we could drop another 20%, and then you'd be upset that you just dipped 30K in a position, or 10K in position, and then find out that we dip another 20%. So all that being said, again, none of this is financial advice, but so we're waiting to really see Wednesday. Aside from that, we might get a little bit more movement upside. If we could break that, I think we could potentially hit a 4K come Wednesday. But again, if we hit 100 points, I think we're going to make it back down to 36K or close to it, the 3600 mark, potentially try to break that. So that's what I'm really watching. Bitcoin, again, still watching these levels. Not really much has changed over a night because we're waiting for that event. But we're looking to break essentially that the 18K 690 mark. So we can break that. And when I say break, you get like a daily candle that opens below that, and then that would essentially be your downfall from that point. So watching that, again, when everything starts looking the same, that's a very bad sign. That means there's going to be a big move coming, and not to the side you typically want. The dollar was high today. It came down a little bit. So oil is still sitting at 85. Things are still very high. Again, energy, I think, is going to have another leg back up. But you just have to wait. In the winter months, I think energy and food are going to skyrocket again. But until then, I think services and rentals will continue to fly. And particularly rentals, I don't know when that's going to die down, when people start getting laid off more. and people start selling houses or bankruptcy, people are going to be looking to rent. And so I think rentals, I don't even think we won't see the peak of rentals for a while. And then again, realize that when rent does rocket up, it doesn't really deflate, it stays up. So keep mind of that. So that is quite interesting there. So BA value stocks, they're slowly melting off. You could say this is a descending wedge. It's actually occurring here. Could potentially be a descending wedge. Again, descending wedges haven't played out. This used to be one of my favorite plays here because they did recover 75% of the move from the bottom to the top typically. So essentially from this point up 75%. It would typically play out 75% of the move, so you at least probably get like the 165 typically of that move. But right now, all we're getting is a break, barely retesting that first resistance, so 154, and then we just die off and continue the trend down. So these, again, really have not been playing out very well at all. So we'll have to see how that does play out. But if we do, we could get like I said, we could get that break going into Wednesday. Depending on what we get. And then if we get 100 points, that could just be the next leg down on this thing, sending us down to the 36. Again, the Fed have been saying they're going to be very aggressive. We'll see how aggressive they do get. JPM, again, still very flat, still holding the trend. Let's see if it breaks back below this or not and heads back down to essentially that 110 mark. Again, it breaks that. It's going to flush pretty heavy after that point. So all things to watch, all things to consider. Again, I'm not going to make this video long until Wednesday. There's no point really reiterating a lot of different things I've already stated. Some more data sets coming out that everything is still very bad. And that was really about it. It's not stuff that holds a lot of weight. Something I talk about, I've given you what I feel has weight and what you should be watching. Everything else is kind of just white noise until earnings. The next monetary policy, and then after that earnings. So we'll really see what happens from that point and see if we can get any more cushion before then, because it could get really nasty. So if you made this far, I do appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.